Hey everybody, thank you so much for joining us. This is Greg Lewis, Marketing Director for Metastock, and today we're broadcasting from my basement as we are still on, not quarantine here in Utah, but we're asked by our local government not to go into our office unless absolutely necessary. And for us at Metastock, it isn't absolutely necessary, so we're not. Make sure I'm all good here to go. Yeah. Looks like we got a couple of people already logged in. Hey, go ahead and let us know what your name is. Say hi and tell us where you're from. We got about 10 or so people logged in right now. And like I say, we'll be starting in about 4 minutes. Today's guest speaker is Jeff Tompkins, and he will be talking about how to predict market direction 5 days in advance. And I'm really looking forward to hearing about that. Today's host is Jeff Gibby. Jeff Gibby is the sales director here at Metastock. So when you look at the chat, these are probably squeaking. When you're looking at chat, you'll see Jeff Gibby chatting in, as well as the chat that says Metastock. When it says Metastock, that's me. A couple things I'd like to talk about before we get started. One, this Saturday, May 30th, is the Metastock Traders Summit, the Traders Online Summit, that features, let me show you the website real quick right here. Just a moment, please. That features 8 speakers, a variety of speakers: Jeff Bigelow, Jeff Tompkins, Vince Vora, Rob Booker, Buff Dormier, our own Jeff Gibby, Robin Dane, and Eric Wilkinson. As well, if you register, you can select, if you want, some freebies that each of the presenters are offering. So it's a pretty good deal. We do this about once every other month, and it's hosted by Jeff Gibby, and it's always very successful. And if you haven't yet registered, go to metastock.com/traders-summit. That's metastock.com/traders-summit. Also, we'll be broadcasting it here on YouTube. So if you don't want to register, you can just come here to YouTube and you'll see it there. And that's also where the recording will be if you happen to miss the live event. Also, I want to point out that this week is the last week of our Metastock 2020 spring event. This is where, if you don't have Metastock yet, or if you want to upgrade to Metastock 17, this is a great place to do it. You can see here you've got upgrade offers for people who already have Metastock but haven't yet done so to 17. We have some great offers for people who want to purchase Metastock. As well, we have some super great offers on Metastock add-ons. So go ahead and check that out if you have just a moment. Get back over here. Okay, it looks like we have about 2 minutes. Let's see if there's anybody. Yeah, Jeff Gibby says freebies, you say. In fact, yes, we do have freebies. Hey, there's a bunch of you out there, and no one's saying hi, and no one's telling us where you're from. So please go ahead and do that. I know we have super fans like Giovanni in Italy. I don't see him here yet. He's almost always here. I'm going to go ahead and mute myself. You can listen to some jazzy music, and I'm going to go ahead and make sure that Jeff and Jeff are ready to roll. So I'll mute myself now, and we'll see you in just a minute. Jeff Gibby, can you hear me?
I can. You sound like an angel.
We'll be starting here in about 45 seconds.
Okay, I'm ready.
All right. $29, $28, $27, $26, 24, 23, 22, 21, 20, 19, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. You are on, my friend.
Hello, everybody. Welcome to today's class. I hope you're doing well. Let's go ahead and get started. Welcome to my home office. Let's read a legal disclaimer, shall we? Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. All right, so there we go. Today we do have a very special guest. His name is Jeff Tompkins. He has a very good first name and a pretty good last name. So we do like Jeff. Jeff's been a partner of ours for a few years now, I think maybe 2 or 3. He runs a company called Altos Trading, and we created a product that's been very, very popular a couple of years ago called Trade Trend. One of the things I will say about Jeff is one of the people that started to kind of raise the warning flags about something might be going wrong with the economy very, very early in the coronavirus crisis. And so with that in mind, I'm very, very interested to see what he's got to say today. So let's go ahead and get him on here. How are you doing today, Jeff?
Hi, Jeff. I'm well. How are you?
I'm doing great. Thank you. I'm going to go ahead and turn the presentation over to you. I know I did an excellent job in terms of introducing you, but is there anything that you'd like to bring, anything you'd like to say about yourself that I might have missed?
No, that was a great introduction. Likewise, I enjoy sharing a first name with you. It's certainly one of the better ones, I think.
Yes. Very good.
Yeah, a little biased there, but in any case, I'll give a little bit of background on myself kind of as we get into the presentation. And I'm glad that you brought up the recent market volatility and sell-off. We will be covering that in more depth today, and we'll be showing you guys how I've used some really cool indicators and tools to help predict some of these, what would generally be considered an unpredictable event. But we'll go through some really great tools and tips and tricks that I use myself and in my hedge fund to prepare ourselves for these market sell-offs that really can not only do a lot of damage to a portfolio, but test our patience and basically emotions in these types of markets. And when I give you some tools, tips, and tricks to manage that, I think that everybody will walk away today from the session feeling a lot more comfortable with handling these types of market conditions. So I'll just kind of put that out there as a preface, and then we can go ahead and start whenever you guys are ready.
It's all yours. Rob Drag says, hi, Jeffrey, but I assume he's talking to me. So the ball's in your court.
All right. Well, let me get my presentation up here and make sure that it's all looking good. So I just got to swap the screen here. Let me get this out. Try it over here. Well, it's not letting me swap. I'm on dual monitors, and it's not letting me swap screens here. If you give me just a second, let me see if I can get this to switch.
If you do, I think I might know how to do this. If you click on the slideshow button again, can you hear me?
Yep. Okay.
And where it says monitor, you see that kind of in the middle. It appears to be actually grayed out, but can you click on that down arrow?
It's actually grayed out. Let me see if that solves it. There we go.
Yeah, there you go. Perfect.
Just had to check that box there and we're good. All right. Okay, sorry about that, guys. Well, welcome everybody. as I mentioned earlier, we've got a lot of great content to cover tonight. And what we'll be focusing on is how to predict market direction up to 5 days in advance. And we're going to look at this in the context of a commonly used momentum indicator that's available on virtually any retail trading platform, as well as on Metastock. So we'll talk about how to use that in not only market sell-off conditions or bear markets, but also to catch rebounds in markets. I mean, this has been an unprecedented historical rebound we've seen after the market crash in February and March, where the S&P traded down about 35%. So we'll get into that here in just a minute, but I'd like to start out by first talking about why the market is so difficult to trade. Most educators aren't going to really touch on this. They want to give you all the answers up front, but I think it's important to understand what makes things so difficult before we can arrive at a solution to make them easier. So I really want you guys to think about that and why the market, which really is a random set of events, and in terms of predicting it, it can be very difficult. So you don't want to blame yourself for that. That's simply the nature of the beast. That there's just really the way things are. And so we're going to focus on some ways to approach the market in a way that will eliminate what really can be boiled down to math in the market. And I like to use an analogy of a deck of playing cards because everybody's familiar with the deck of playing cards. We know there's 52 cards in a deck. And in fact, if we arrange a deck of playing cards randomly or shuffle it properly, there's an extremely high chance that it comes out in an arrangement that's never existed before. And that's because there's simply a really large number of possible combinations. And believe it or not, there's actually more ways to arrange a deck of cards than there are total atoms on the planet Earth. And that boils down to a 69-digit number. Okay, so if you can imagine in the market all the possible combinations of inputs, whether they're fundamental and or technical, you can see why it would be very difficult to predict any sort of outcome in the market, because it's certainly virtually impossible with a deck of playing cards. And there is a factor, it's really the factor actually that causes most systems and strategies to fail. And that's simply because they revolve around a specific set of rules in an environment that's extremely dynamic and constantly changing. And again, there's just a very large number of possible inputs, both fundamental and technical. The good news is there is a method that overcomes this drawback to the markets and works regardless of how the cards are dealt. And that's what I'm going to show you guys on our session today. So here's what I'm going to give you to make it easier. I'm going to show you how to use one indicator to predict markets in any time frame. We'll talk about the correct way to use the indicator to make money in the markets, exactly when to buy and when to sell. So the beauty is there's no guesswork involved here. You get a very specific set of rules and instructions that let you know when to get in, when to get out. It will also show you how to identify when momentum in the market is shifting and a new trend is starting, right? That's kind of the holy grail that we all search for in trading systems and strategies, is knowing when that new trend is starting. And we'll talk about how to eliminate the majority of your losing trades. I'm going to give you guys a really cool little trick here that works with this particular indicator that can eliminate up to 30 or 40% of your bad trades. And that's huge. All systems and strategies have winners and losers. And unfortunately for most people, the losers wipe out the winners. And so if we can eliminate a lot of those, you can imagine how that can improve your overall success. We'll look at how to use this in the context of any market. So regardless of what market you guys are currently trading, or if you're brand new and searching a market to trade, the good news is this works for any market: stocks, futures, forex, options, and it works with consistency. We'll look at some trade examples, and then I'll show you guys how you can copy my success and get my trade signals I use to make a living in the markets, and then I also use in my hedge fund, which I'll talk to you a little bit about here today. So I want you guys to imagine if you could have predicted every major market sell-off in the history of the market. Well, in fact, the one momentum indicator we're going to look at together today predicted the recent Corona crash on February 21st. So that was basically right before things started to get really bad in the market. Not only that, it predicted all 4 corrections in 2018. If you guys were trading back in 2018, you'll remember that we had 4 very significant corrections. It was a bumpy year in the market. And we often see that prior to some sort of event, whether it be a black swan or a geopolitical event or a pandemic like we're in now. When the market becomes a little unstable, often a year or 2 before a crash, we'll start to see more corrections than normal. And we saw that in 2018. This indicator also predicted the flash crash of 2015, an entire day before it happened. It predicted the 10% correction in October 2014, 2 weeks before the sell-off. So in general, this indicator will give you some good degree of advanced warning, sometimes more than others. In this case, it gave a 2-week warning before that correction. And if you're trading all the way back in July 2011, it predicted that crash several days before bears began driving prices down. And then last but not least, it predicted the major sell-off in 2008. If you guys were trading over a decade ago, you'll remember that was the housing crisis when the market lost more than half of its value in a very short period of time. All right, so this is a handful of examples of what this indicator can do in terms of predicting market sell-offs. It's certainly not limited to these. In fact, I've gone back and done lots of testing on this decades back into the past, and it's done a pretty incredible job at giving predictive warning of market sell-offs. Now, of course, no indicator can predict, it doesn't have any sort of ability to look forward and predict something like a coronavirus. But what it does do is it basically can determine when momentum is starting to slow down and shift, so that if something like a pandemic or a major geopolitical event or a housing crash does come into play, when the market is relatively weak and momentum is relatively weak, then that's where you can really be primed to make money when one of these events comes along. So let's look at that in the context of the market corrections I mentioned in 2018. I like to use this as a case study because, again, it was a bit of an unusual year. It was quite choppy, and it was still in the context of a broader bull market, but it's fairly unusual that we see 4 major corrections in a calendar year. So what I have here is a chart of the S&P 500. It's a daily chart. The SPX is the ticker on this, and we're going to look at these corrections on the chart. So the first one you see here happened early in the year, January and February of 2018. And this was right at the all-time high of the market around 2,900. And you can see there that we had quite a significant sell-off down into the 200-day moving average on this first correction. And then we go into sort of a sideways ranging price action pattern there shortly after the sell-off, but a pretty good rebound. Until March hits, we top out about 2,800 on the S&P and another mean reversion to the 200-day moving average. Then in the middle part of the year, we're in this nice steady uptrend, right? I mean, it's almost picture perfect. We hit a new all-time high in the market there at 2940.91, and the bears move in again and push prices down significantly down near the 2,600 level, this time selling up below the 200-day moving average. And it's interesting, we kind of go back into that very similar sideways ranging price pattern that we saw between the 2 corrections earlier in the year. It's almost identical until we get that last major sell-off in December of 2018. This one almost put us into bear market territory, which is classified as a sell-off peak to trough of 20% or more. And we were just under that, bottoming just under 2350 on the S&P. So in just a little bit, I'm going to show you guys how we could have used that indicator to help us prepare for these corrections in the market and even profit from them using specific strategies. All right. So before we get into that, I will give you a little quick background on myself. If you guys have not attended any of my educational events in the past, I am the Chief Investment Strategist at Altos Trading with over 20 years of experience trading the stock, options, and futures markets. I did receive professional training at Morgan Stanley, where I studied under the traders at the trading desk there, and again founded the what started as Altos, or the Trading Profit, and then merged with Altos Trading earlier this year. And we currently have over 30,000 members and students in over 100 countries across the globe. I also am the founder of and hedge fund manager at Altos Capital, and founder and creator of the Trade Trend Signal software, which we'll be talking to you guys a little bit about today. So by the end of our session, you're going to discover how you can use one simple indicator to accurately predict whether the market is likely to go up or down over the next few days or even weeks. And better yet, you can have access to this powerful information up to 5 days in advance, and that's key. Most people will use indicators basically in a real-time environment and make decisions on the spur of the moment as the indicator flashes a buy or a sell signal. And that can be problematic in a live trading environment. And we'll look at why that is here today as our time progresses together. So if you can have a tool that actually tells you in advance whether to get in or get out or go long or go short, wouldn't that be much better than having something that you have to act on immediately? And like I mentioned earlier, regardless of whether you trade stocks, futures, forex, options, we can use this information with any market and anything that produces a chart. And again, regardless of whether you're just starting out or you're a seasoned pro, we have members that are brand new to trading and people that have been trading for decades that use our tool to help them predict market trends. So that's what you're going to walk away with by the end of our session together today. So let's start out by talking about why momentum is so vital to trading success. This is what you're ultimately going to discover today in our time together. And I'm going to teach you how to read momentum shifts and continuations. And I promise this will completely turn your trading around, because being able to be on the right side of the market, whether you're an options trader, an equities trader, a futures trader, is invaluable. It's really key, regardless of your trading strategy, to be able to gauge which way the market is going and be on the right side of momentum. And we'll talk about how to use momentum as a leading indicator and not a lagging indicator. That's obviously the problem with virtually every indicator out there, is that they use lagging information and don't give you much leading information. So we'll talk about how to solve that problem and how momentum can predict market moves and why that occurs. And then I'll show you guys how to get your hands on a tool that will change your trading forever. And I say that because it's changed my life and my trading forever. And it's allowed me to trade with consistency and create profitable trading days, weeks, months that allow me to support myself and my family and live a life that I like to live. So I want you to start out by imagining a bowling ball. And this may seem like a bit of an unusual analogy to have on a trading presentation, but you'll see why it makes sense here in just a second. And I use it because it's a relatable principle in terms of understanding market momentum, because we're all familiar with bowling, whether we bowled or not at some point in the past. And more importantly, we can, just based on common sense and what we've observed being alive on planet Earth, is we know what happens when a ball rolls, right? So when you roll a bowling ball down the alley, we know that it's going to continue to roll until something stops it. And whether that be, hitting the pins and getting a strike at the end of the bowling lane, or whether it goes in the gutter, something has got to stop the ball and return the momentum in the other direction. All right. And in physics, that's basically referred to as linear momentum, which is the property or tendency of a moving object to continue moving. Okay. And for an object that moves in a line, like a bowling ball or the market, so if you imagine a chart that moves in a linear fashion, the momentum is basically the mass of the object multiplied by its velocity. Now, the calculation used in trading is a bit different, but the principle is the same. So keep this analogy in mind as we talk about momentum in the market, because it's essentially the same principle with a different catalyst. So unlike a bowling ball where it's the force of your arm that rolls the ball and sets it in motion, in the markets we have supply and demand, or buying and selling pressure that sets the trend in motion. Okay, so keep that in mind. So in the market, when you have a momentum indicator, that's the input into, it's that's the lagging component. It's the input from the indicator that tells you the strength of the momentum. But it's once the ball is released, it's the forward momentum where it gives you basically a predictive measure of what might happen or is most likely to occur with a trend. Okay, so that's basically the principle there and the tie between linear momentum in physics and linear momentum in the markets. And basically a momentum value above zero indicates that prices are moving up, and below zero indicates prices are moving down. And what this means in practical terms for us as traders or investors is we can pinpoint areas where trend reversals are highly likely to occur in the market. And that's extremely important. So we can take basically lagging information from an indicator and use it as a forward-looking tool to determine the most likely direction of the market. And although we'll be focusing predominantly on market crashes, the good news is it doesn't only work for market crashes. You can use it to make money on the way up. And I'll show you in a minute how this particular indicator actually predicted the rebound that we've seen over the last couple months in the market. Okay. And so basically momentum measures the rate of the rise or fall in a security's price. And it's a really valuable indicator of strength or weakness. And the one that we're going to focus on today can pinpoint turning points in stocks, futures, and forex with astounding accuracy. So this is another daily chart I've got in the middle of the screen here. I believe it's the SPY, the SPY that tracks the S&P 500. And you'll notice there on the left side of the chart, the left half of the chart, a significant downtrend or sell-off. And this particular momentum indicator actually caught this shift in the trend, or where the momentum changed from going down from negative to positive, and caught this trend back to the upside. Okay. So you can see how this can provide predictive momentum information on a linear chart. So let's look at some examples of commonly used momentum indicators so we can get a feel for what they are, the differences between them, and then we'll focus in on the one that I have found does the best job at predicting market trends. So the first one is the average directional movement index. Many of you have probably heard of this. It's often called the ADX. And basically it's a measure, it basically measures average expanding price ranges, okay? And by the way, all of these momentum indicators have their strengths and weaknesses. Like I mentioned earlier, one of the main weaknesses of these indicators is if you're trying to use them in a real-time live trading environment, they can become problematic and challenging. So we'll be looking at how to solve that problem here in just a minute. The next one is the Commodity Channel Index. This one's referred to as the CCI. It's actually often used as an oscillator, and it measures the relation between price and normal deviations from a moving average. And the third one is the MACD. This one is a very commonly used momentum indicator, and it's also very versatile because it reveals changes in the strength, direction, momentum, and duration of a trend in a security's price. And last but not least is the Relative Strength Index. This is a very commonly used momentum indicator, also used as an oscillator and often used as an overbought, oversold indicator, and often again referred to as the RSI. But what it does is it measures historical momentum strength or weakness of a security based on a closing price over a specific period of time. And generally the default common setting on this one is a 14-day period. And again, it's a great indicator. I don't particularly like it as an overbought, oversold indicator simply because markets can remain overbought or oversold for very extended periods of time. So if you get, for instance, an oversold reading on it on any particular price candle or price bar, it's very difficult to act on that information because it can continue to remain oversold. So trying to use it as a reversal indicator many times, in fact, most times won't work very well. All right, so let's focus in on one of these in particular that does work very well in terms of predictive qualities when looking at future price momentum and trends. And that's the MACD, or the Moving Average Convergence Divergence. And we'll look at how to use this one to predict market moves. And again, this is available for free on virtually any trading platform, including the Metastock platform. So what is the MACD momentum indicator? Well, again, it's short for Moving Average Convergence Divergence. And it's been around for a long time. Gerald Appel developed it back in the 70s for use in the stock market actually, but again, it works in any market, and it reveals changes in the strength, direction, momentum, and duration of a trend in a security's price. All right, so it's very versatile. And the way that we use it to determine future momentum in the market or trends that are just whether they're shifting or it's a trend continuation, but basically when the trend is setting in, is with the MACD cross. And basically with the MACD cross, we get a buy signal when the MACD line crosses above the signal line, and a sell signal when the MACD line crosses below the signal line. And we'll take a look at that here on a chart. In fact, we'll use the chart that we looked at just a little bit ago of the S&P 500 during 2018 in the context of the market corrections that year. And you'll notice that this time I've got the MACD plotted at the bottom of the chart here. So let's take a look at the crosses in terms of predicting these 4 corrections. And where these crosses occur relative to the 0 line, the slope of the cross, whether the lines are converging or diverging, are all significant. And we won't have time to really get into the nuances of those today, but just know that is a significant part of the analysis. So for now, I just want you to simply focus on the crosses themselves and where they occurred in the context of the market correction. So this first one that we saw in January gave us a pretty good warning near the top there when the market sold off there and basically reverted to the 200-day moving average after topping out around 2,900. All right, and then again, we go into that sideways ranging price action. And of course, you'll notice there are many other crosses on here, but again, just focusing on the corrections. And another one, this one closer to the 0 line, but about the same slope and magnitude of the MACD line cross in terms of the signal line crossing. And we see that it did a pretty good job of letting us know that the momentum was shifting from up to down. Didn't get it quite near the top like it did in the earlier correction, but did a pretty nice job there. Then we'll fast forward to October. That's when we see our 3rd correction. There's the cross. This one is much more difficult to read, obviously, because the lines are not diverging quite as obviously as they were in the first 2 corrections, and they're horizontal and very close together. But it did warn us that the momentum was likely shifting. The market was vulnerable and weak to a potential correction. And there we see it, of course, the sell-off below the 200-day moving average. And then the last one in December, this cross took place below the 0 line, and again was rather dramatic in terms of slope and severity of the cross there. And you'll see that it also did a fairly nice job at warning us of a market correction or market sell-off there in December. All right, so you can see the value there of the MACD line cross in terms of predictive, basically capabilities of predicting market sell-offs. Now, I'm going to give you guys an easier way to read these, because as we saw in that October sell-off, they can be a bit tricky, all right, to interpret when the lines are close together, horizontal, and converging, as we see on the MACD line indicator, right? So that's difficult. So an easier way to interpret this and actually use it in a live trading environment is with the MACD histogram. And the MACD histogram gives us the same information that the line indicator does, but it does it in a much easier to interpret format. So basically, when the future momentum or future trend is likely to be down, the histogram will be red and it will give us a sell signal. And then when the histogram shifts from red to green, it gives us a buy signal. So that's much easier to read and interpret and act on in a live trading environment than the line. So let's actually take a look at that in the context of a stock chart. This is a chart of Momo, M-O-M-O. And this time I've got the MACD histogram plotted at the bottom of the chart. Okay, and you can see how much easier it is to read. We get the shift there on the left side of the chart from red to green. That's what gives us the buy signal. telling us that the likely future price momentum or trend is to the upside. And you can see we have that nice steady uptrend over the course of a few weeks until the histogram shifts from green to red. This is where it tells us that this might be a good time to take profits on our trade, to get out of the market, or implement a strategy, a bearish strategy where we can make money on the sell-off. This was a short-lived one that took place over the course of only a couple of days, and then we get the shift back from red to green, telling us that it's now safe to get back in, and the likely future direction of the stock is to the upside. And of course, we see that here on the chart as we go back into the uptrend for a couple of weeks until we get another shift from green to red, giving us a sell signal. This is a great time to take profits, scale out of our position, go flat as the stock sells off for a few days. In fact, it sold off fairly significantly, topping out just under $36 a share and selling off down to around $30 a share on the open on that particular day before shifting back to green on the histogram, telling us that, again, the trend is likely to continue to the upside. So you can see not only the accuracy of the MACD histogram, but the ease of use and using it to make our trading decisions. Now, I'm going to give you another little tip or trick here to help weed out false signals and eliminate a lot of your losing trades using the histogram, because any indicator you use is going to be vulnerable to losing trades at some point when the market conditions change, when things move sideways. So this will help keep you out of some of these trades and eliminate false signals when conditions are not conducive to a momentum-based strategy. Okay, and that's using a very specific type of order called a buy stop or a sell stop order to confirm the momentum direction. So basically what I do is I use a buy stop order to enter long trades and a sell stop order to enter short trades. And it helps improve the consistency and increase the profitability of the momentum indicator. So in this case, if you were to get a shift from red to green on the histogram, giving us a buy signal, rather than jumping in right away with a market order or a limit order, what we do is we place a buy stop order above the high of the candle where the histogram shifted from red to green. So that way, if there's no follow through of the momentum and it's a false signal, we don't get into the trade. And conversely, if it's a sell signal, a shift in the histogram from green to red, we would use a sell stop order below the low of the candle where the histogram shifted from green to red. And we would only enter short if we're implementing a bearish strategy if the market actually follows through and trades below the low of the candle where the histogram shifted. Okay, so that's a little trick that you guys can use, and I use in my own trading and in my hedge fund to help eliminate bad trades. And in fact, I found it can eliminate it, again, up to 30 or 40% of trades that you wouldn't otherwise want to be in. So that's all well and good, but of course, the thing is, here's the the real catch is that momentum indicators must be used correctly. Obviously, if they were easy to use and worked correctly every time, we'd all be wildly successful traders. And unfortunately, that's simply not the case, right? So what I've done is I've spent more than 10 years and thousands of hours trying to figure out which momentum indicators work the best across multiple markets, when to use them, and how to use them most effectively. And it was certainly a big challenge, and I'm not a real big believer or fan of back testing, although it does have some value in trading, without a doubt. I really am a strong advocate of live forward testing with real money. But basically, once I got the settings dialed in a live environment using my own money, I had to formulate them to work across all time frames and duplicate the success across all markets in an adaptable algorithmic formula that actually can have predictive qualities versus lagging qualities. And that's key. So the problem with momentum indicators in general is that when you used alone, it's not that they're necessarily hard to read or look at when you put them up on your chart and determine where the buy and sell signal was. But using them in a live environment, they can sometimes give you false readings or a lagging signal. Or if market conditions change, they can even stop working when you really need them the most. So what I've done to combat that is I've developed a highly effective market adaptive algorithm using a unique combination of momentum indicators and proprietary settings. And when you formulate the right combination of momentum indicators and combine them with volatility studies and price action setups, the good news is you can actually do much better than the MACD alone. So I've shown you how well the MACD can work by itself, but imagine if you could do even better. And that's what I programmed with the help of Metastock into our product called Trade Trend. And what Trade Trend does is it allows you to get in the vast majority of the time before the MACD signal using a proprietary blend of momentum indicators. And it can be used to predict both short-term and long-term trends with astounding accuracy. And we'll take a look at that on some charts here in a little bit. The beauty, again, is it works with stocks, futures, and forex. And that was a big challenge because every market has its nuances and differing price action. So it's very daunting and become very challenging to create something that actually works across all markets and all time frames. And Trade Trend works in any time frame, whether you're an intraday trader trading off a 5, 10, 30-minute chart, or you're a longer term trader trading off daily, weekly, or monthly charts. And you'll see here in a little bit that you can actually use the tool to back test before you place a trade and to see how it works in varying market conditions. And again, I'm not a big proponent of back testing, but I do believe that if you're going to implement a system, you'll want to have one at least that you can run on your selected time frame or market to see how it's performed in the past before you put your hard-earned money at risk. And we also have a lot of members who use this tool to supercharge your option strategy. So in fact, we've got a lot of members who use this in the options market, and many of them will come to us having traded very complex multi-leg strategies like iron condors, differing vertical spreads, ratio spreads, calendar spreads, butterflies, and those are all great strategies. But many of those traders that come to us and begin using Trade Trend often will simplify their option strategies and simply buy directional calls and puts off of the momentum signals because of the accuracy of predicting future momentum. They're a great tool for that. And ultimately what it does is it allows you to trade like a pro without any guesswork involved. So as you'll see here in a little bit, it not only tells you when to get in and what exact price to enter the market at, it tells you how to manage the trade with a trailing stop and when to get out. So it's pretty powerful. So I'll be telling you how you guys can test this out here in just a minute. Now, again, I believe in testing with real money and real market conditions. And these are screenshots of my real money live TD Ameritrade brokerage account using the Trade Trend indicator in the futures market. And I simply was using the indicator in the futures market with one contract per trade off the daily chart. So there's no crazy day trading here. I'm not trading, 10, 30, 40, 100 contracts, nothing like that. All one contract. Just like any indicator system, you're going to have losing trades. Trade Trend does a great job at keeping losing trades contained and letting winning trades run. And you can see that by the screenshot of my profits here, where my losers are relatively small and contained, while my winners far outnumber my losing trades in dollar terms. And you can see in a single day, it allowed me to create over $13,000 in profit there on the left side of the screen. And in the middle, you see on this particular day that I took the screenshot, I created over a $3,600 profit. And lastly, on the right side of the screen there, you see over a $4,400 profit in a single day using the Trade Trend indicator. So this is a little bit of what's possible when you're able to predict future market momentum and trends. So let's look at the MACD momentum indicator compared to the Trade Trend indicator, because remember I mentioned that Trade Trend often allows you to get in to the market. It gives you more of an advance warning before the MACD would flash a buy or a sell signal. So this is a daily chart of the SPY, the S&P 500 ETF. And I don't have the MACD plotted here, but it gave a buy signal. So if we had the histogram here, it would have shifted from red to green here, right there near the middle of the chart. And it still did a nice job at letting us know the likely future direction of momentum was to the upside. We were in a really nice kind of overall uptrend here. Now the trade trend indicator actually gave us a much more advanced warning over a week before the MACD indicator did. And I'm going to put this in in context for you options traders out there in dollar terms, so we can see what this means in terms of getting in that much earlier in the trend. So if you had bought 10 at the money call contracts off both the MACD signal and the trade trend signal and gotten out here when the histogram shifted back from green to red, on the MACD signal, you still would have had a profit there of $335 before commissions and fees. However, our trade trend members who got in over a week earlier and bought 10 at the money call contracts profited nearly $5,000 on that signal. So again, that's the value of getting in to the momentum shift earlier than the MACD allows you to do. Let's look at some more examples. This is a chart of Micron, again, just a daily chart, that gave us the buy warning, as you can see here. And the stock, although it's cut off on the chart, had been going down, and it actually caught this shifted momentum before we went into a really nice, strong uptrend. So it got us in kind of right around $48 a share and out around $55 a share. So that's a $6 per share gain, or $6 or $7, depending on where you got in and got out exactly. And on 1,000 shares traded, that's a profit of $6,000 in only 3 weeks. Okay, and the horizontal green lines you see there are the trailing stops. So it also tells you where to trail your stop to lock in profits as the security moves in the anticipated direction. Now that was just one trade on Micron. So what I did is I pulled 5 consecutive trades from the trade trend signals at one of the worst times in the market to try to predict market trend or direction. And that was at the end of 2018 when we looked at those last 2 corrections in October and December. So I started out in October and took the 5 consecutive signals all the way through the end of the year when we saw 2 major corrections and a lot of choppy price action. And if you had just bought the stock or sold the stock short on those 5 consecutive signals, it resulted in a profit of over $13,500 on 1,000 shares traded. Now, if you're an options trader and you'd simply bought calls and puts on those same signals, you would have put up a lot less capital to make a really nice return of nearly $7,000 on those 5 signals. So we had one little loser in there, but again, Trade Trend does a great job at containing the losing trades and letting the profits run on the winners. Now, this is at the top of everybody's mind right now, right? The Corona crash, or the COVID-19 crash that just recently occurred. And the great news is Trade Trend predicted this sell-off on February 20th before the market actually tanked. Okay, so there's the sell warning. Remember, I mentioned that Trade Trend always gives us a warning. This is not where we get into the market. This is simply the sell warning that tells us the market is very likely to move to the downside in the future. Okay, and it actually told us when that was likely to occur 1 day before the MACD. And you'll see why that was significant here in just a second, because as the market began to tank and lost about 35%, I believe it was, at the lows, Trade Trend got us in and gave us the warning on the 20th and got us in on the 21st. The MACD was a day later, and that's significant because you'll see that gap there after the confirmed entry around 3,300. And on the MACD signal, you would have missed out on that whole gap down from 3,300 to 3,200 or 100 points. So that's really significant. So again, the market reached its all-time high the day before the warning signal, the red down arrow, and got us into the market or out. If we're more of a buy and hold investor, we could use this information to go to cash. But for those of you who like to make money to the downside, like I do, this is the warning. you know, and the day before, very trading day before this warning signal, that was the all-time high in the market before this crash. Okay, so it virtually caught it near the top before the sell-off. Now, let's put that in dollar terms again for you option traders out there. If you had bought 10 at-the-money put contracts on this one signal alone, the profit on those 10 contracts was over $100,000. Okay, and that's with an investment of $4,760. So the cost of those put contracts at the time the signal was given was $4,760 per contract. So that's an extremely impressive profit on this one signal alone, trading options. So again, trade trend works in any market, it works in any time frame, and it works with any size account. So if you're trading a small account, we have many members who use it to help build their accounts. And we also have many members who use it that already have built up their accounts to make a living and create consistent income in the markets. And regardless of what time frame you trade, whether you're an intraday day trader or a longer term swing trader or position trader, it can work very well to help us stay on the right side of the market and the right side of momentum. And what it does is it provides predictive buy and sell signals before the move occurs. So you get the buy or the sell signal, the warning signal, in other words, the green arrow or the red arrow, before you need to get into the market. And you actually have up to 3 candles of advanced warning. So if you're trading off a daily chart, you know up to 3 days in advance the likely direction of whatever security you're trading. If you're trading intraday, let's say off an hourly chart, you know up to 3 hours in advance where to place your order, at what price, and whether to go long or short. And this is incredible and hard to believe, but it's true. And I challenge you to look at this on a chart on Metastock. But if you look back at every single correction or crash in the market, trade trends actually predicted every single one with 100% accuracy. You can go all the way back to the Great Depression and look at every single major market sell-off that's occurred since then, and you'll find that trade trend provided a warning beforehand. Okay, how powerful is that? I mean, there's not really anything else that I'm aware of out there that can do that. And not only that, it does a really incredible job at predicting the rebound. Okay, so let's look at some of these market crashes. This is first on the left side of the screen here. This is a chart of the S&P back in 2010. So we're going back a decade here to the flash crash of May 6th. And you see that there is the sell warning provided by Trade Trend right before the market tanked. All right. And then on the right side of the screen, you see a more recent chart of the flash crash that occurred in 2015 on August 24th. There's the sell warning right near the top of the trend. And there's the sell-off. All right. Let's go back even further to the 2008 recession and mortgage crisis. This was the housing crash. And Trade Trend is flashing sell warning signals. And it actually gave us a few all the way down as the market lost more than half of its value. It also gave us some nice buy signals to the upside during the rebounds. So really, there's no need to go to cash unless you're a long-term buy and hold investor. You can actually cash in on these sell-offs. Now we're going all the way back to the dot-com bubble. So about 20 years ago, we're looking at the dot-com bubble here on this chart, and we see the sell warning, and there's the sell-off. All right. Not only that, we had some really nice buy trades up until the peak of that trend. Now, not every buy and sell warning results in a trade. So you'll see that nice buy signal there on the very far left of the chart gave us a nice trade to the upside. We did get a sell warning there on the first day of the year in 2000. And remember that trick I told you guys, using a buy stop or sell stop order to confirm momentum direction and only get in if there's follow through. That first sell signal didn't result in follow through. In fact, the trend continued for another couple of weeks. And so there was no trade there. And you'll see at the top where we've got that sell warning before the market crashed, we get the confirmed entry with the red dot after the sell warning. That tells us that the security hit the suggested entry price that was provided to us when that sell warning was flashing and allowed us to get in and go short. Now, virtually every system will produce winning trades. There's no doubt about that, right? Every system can produce a winning trade. problem is they don't keep you out of the market when conditions aren't favorable. And what happens to most people is they end up giving back their profits on the losing trades, because just as there are inevitably going to be some winning trades, there's also inevitably going to be losing trades. So the key there is trade management, staying out of the market when conditions aren't favorable. And so we've come up and provided a tool in partnership with Metastock that allows us to overcome this major problem in trading. And again, here's real money proof, live screenshots from my TD Ameritrade brokerage account of that exactly. So these are actually screenshots of the 4 corrections back in 2018. So I took these screenshots again during those corrections, and I was able to take advantage of the market sell-offs thanks to the trade trend warning. And you'll see that I made over $8,000 profit on that first correction in a single day, over $6,500 in profit on that second correction in one single day. The October correction, over a $6,000 profit in a single day. And in the December correction, over $5,400 in profit using the trade trend signals. So here's my promise to you guys for joining us today. I want to help you guys have days just like these, and I'm going to give you access to a tool that lets you copy my trades. And these are trades, again, that I make in my own live TD Ameritrade brokerage account to make a living in the markets, as well as in my hedge fund, Altos Capital. So there's a one-time opportunity for joining us today to join me to discover how I make consistent income in the markets day after day and week after week, all programmed into a Metastock add-on called Trade Trend that, again, lets you get in before the MACD signal the vast majority of the time, using a proprietary blend of momentum indicators that can produce nearly instant profits. It also predicts short-term and long-term trends with astounding accuracy. So again, regardless of what time frame you trade in, trends are created on any time frame, whether you're trading off a tick or 1 minute chart or a daily chart. And it helps spot those trends, both trend changes and trend continuations, with really astounding accuracy in any market, whether you're trading stocks, futures, forex. And it also allows you to screen for trades in the Metastock platform to look for trading opportunities that are setting up to 3 candles in advance, again, on any time frame. Metastock also has a really robust, in fact, it's probably the most robust backtesting tool I've ever seen on a platform, and a charting platform. Even a lot of the big brokerage houses out there like TD Ameritrade, IB, Interactive Brokers, eSignal, I haven't seen anything that matches the power of the Metastock backtesting tool. And you can backtest all of this in their platform. And in fact, the trade trend, nothing repaints with trade trend. The trade trend signals never go away. So once they're a confirmed signal on the chart, they're there for good. And you can go back and look at those on your chart as well. You can also use this tool to supercharge your option strategies, like I mentioned. It's a great tool for helping you get in and out of the market on a directional options trade. Or if you're trading more of a market neutral strategy, like an iron condor or a credit spread, it can help you find really great high probability trades in terms of pinpointing where momentum is likely to shift and move back the other direction, or where a range might be setting in. Okay, so ultimately it allows you to trade like a pro without any guesswork involved, because it gives you the entry, it gives you the trailing stops, and it gives you the exit. And ultimately, it allows you to cut the learning curve and trade like a pro starting as early as tomorrow. So when the market opens up tomorrow, you guys will be able to have access to this tool, and we'll talk to you about how you can get access to it here in just a second. But certainly the learning curve in trading is extremely steep. For me, it took well over a decade of trial and error and many, many hours of live trading to become proficient. And that was my goal in developing Trade Trend, was to help other aspiring traders cut that learning curve and not have to spend over a decade of headache and losing money, making it back, losing it again, making it back and losing it again over and over and over before you can finally become consistently profitable. So I want you guys to ask yourself, if you're able to avoid the next major market crash and even make money from it, how much would that be worth to you? Or if you're able to trade the next market sell-off like a pro, how much would that be worth to you? There's a lot of speculation. I believe it's very valid that we could see a double retest or a double bottom in the market. So we've certainly seen a really strong rebound in the market. And again, trade trend caught that. We'll look at that on a chart here in just a minute. But if the market does sell off again in the near term, or when it ultimately will sell off again at some point in the future, I want you guys to be prepared for that. So here's a few things in terms of what our members are saying about trade trend. These are members of ours that have used trade trend in their own trading. So I wanted to share these with you guys to see how other people are doing. So Jay Thomas says, very impressive results. Well done. Thanks for helping us little guys with small accounts who dream of growing our accounts over time and reaping the benefits of consistent monthly income. Frank says, how refreshing to have someone produce a product that does what it says. I thought it was too good to be true at first, but you proved me wrong. Thanks and keep up the good work. And Brian, this was a great one. I got this one a few weeks ago from Brian. He was really struggling last year in his trading, and he ended up joining Trade Trend. And last year, he said at one point he was down $42,000, but he's now happy to report that he's recouped all those losses and is now net positive over $47,000 on Trade Trend trades. And for him, the system actually generated about $90,000 of profits in only 90 days. That's really incredible. He said the system itself would have generated even higher returns if not for mistakes on his part. So he says he's very thankful to the good Lord for leading him to our system. Alan was one of our early beta testers of Trade Trend. He says that he's been involved with lots of software testing, and Trade Trend seems to do exactly as it says. And so far, he could find some really nice setups. And lastly, Craig said, my first trade paid for the entire package. Nothing ever works for him this fast. He wishes he would have found this before all the market dips. And this was, I believe, in 2019 before we, or after we'd seen those 4 corrections the year before. So I'm going to open it up to Q&A now, and I want to share a chart too of the S&P here in a second. But I want to also open it up to Q&A. I know we have viewers on both the webinar platform with us today as well as YouTube. So I know here in just a minute, Jeff will be relaying some of those questions to me so I can get those answered. If we don't get to everybody, you can always email us at support@altostrading.com, and we're happy to answer those via email at any time. Let me get over real quick before I start answering questions to the Metastock platform. I've got the chart of the S&P 500 pulled up here, so we can see what the warnings and signals were for the recent sell-off and rebound. So you'll see there near the top on February 20th, the sell warning, that's the red diamond, okay? And then the confirmed entry with the red arrow. So that was the sell-off. And you'll see there near the bottom, Trade Trend actually caught the reversal right near the bottom with the green diamond and the confirmed entry on the following candle the next day with the green arrow and caught that to the upside. And the cool thing is, let me pull up the commentary. I mentioned that Metastock also provides the exact entry and exit price for every trade. So if I go back here to that particular day, let me see if I can get back. And see, that was back kind of towards the end of March.
Just click off of the bar a little bit. You can click right below the bar and it'll move.
Oh, okay. Not what I was doing. There we go. Okay. So March 25th. That's one thing I love about doing webinars with Metastock is they have a great platform, but I'm not very tech savvy, so I don't often know all the ways to do things. I do things the hard way. So it's great to have Jeff tell me all the little tips and tricks. Okay. Normally I arrow through every signal.
I'm here to help.
So you can see here on March 25th, we got the buy warning, and the commentary will tell us that the suggested long entry trigger price. Sorry, let me actually get back one candle too far. There we go, March 24th. It will tell us that the criteria for a buy setup has occurred. Okay, so this is simply telling us to get ready and to enter our buy stop order. Remember, I talked to you guys about using the buy stop and sell stop orders, and it tells you the suggested entry price. So in this case, it was $2,450.22. So we would place our buy stop order at the suggested entry price. And then it also tells us not to take the trade if price gaps above a certain level. So that's really valuable information. A lot of times we get gapping in the market from overnight futures activity, and it protects you from any major gaps in the market by telling you not to get in past a certain level. And we can use a buy stop limit or a sell stop limit order to accomplish that. And then if a trade is triggered, it tells you where to place your initial trailing stop. Okay. And then this updates on every candle. So we're looking at a daily chart here, but every candle, regardless of your selected time frame, it will update your trailing stop order, so you know where to move that to and when to get out of the trade. All right, so that's basically how that works. Now, there's lots of ways to use the tool. Obviously, if you're trading options, you can use contingent options orders to buy a call on a contingent basis if the underlying security touches the suggested entry price. And there's a lot of ways to manage that as well. If you're trading directional options, like simply buying calls or puts or doing a vertical debit spread, you can place a, so I mean, some of our members use a trailing stop level, but a lot of them will place a limit order to get out on a double of the option premium, or there's lots of different, obviously, techniques to scale in or scale out of a position. But I just want to kind of share with you guys what that looks like on the Metastock commentary in conjunction with the signals that show up on the chart. So let's go ahead and open it up to Q&A. Jeff, if you want to just relay any questions that come through to me, I'll do my best to answer those. And again, if I don't get to anything, as we're running up right on an hour here, you can always email us at support@altostrading.com.
You got a lot of them too. So let's go ahead and jump in. I'm going to start. This one we'll just pick from YouTube. How does this work on Bitcoin or Ethereum? Marco wants to know.
Oh, that's a great question, Marco. I don't trade Bitcoin. I will from time. There are now Bitcoin futures, and I will from time to time trade the futures contracts on those, but I don't directly trade Bitcoin, so I can't necessarily comment on that directly, other than the principles are all the same. The anything that can produce a chart and momentum or trend, it will generate buy and sell signals. I can tell you that we do have many members who use it on the cryptocurrencies, and they reported that they've done very well with it. So that's all I can really share. I haven't actually used it on Bitcoin myself.
Another one from Utah. G-Egg says, great presentation. Are you using, for the MACD, are you using the default value of 12, 26, and 9?
Yep, great question. Yep, 12, 26, 9. Just use the default settings on that. Yeah, and again, I played around with lots of different settings on all the momentum indicators. But in terms of the MACD, I just use the default. I haven't really found that changing those settings much really helps. In fact, more times than not, it's detrimental to the indicator. Gerald Appel, I think, really dialed it in with that default setting. But you may find that depending on what market you're trading, you can optimize it a bit for the market or the time frame. But I generally find the default settings work really well across most time frames and most markets. But again, that's really the power of trade trend, is that I've been able to combine these momentum indicators and look for a very specific set of rules and settings that can beat the MACD indicator, regardless of what settings are on those.
Okay, James over on the GoToWebinar side wants to know if you have any specific recommendations for options traders.
We do have run a few options alert services on our website, altostrading.com, where we do issue specific recommendations for a variety of options strategies. In the context of trade trend, we don't currently have anything that alerts people to a buy or sell signal on trade trend, but the good news is that it can be set up to do that for you on the Metastock platform. Again, you can run scans for opportunities in virtually any market in any time frame, and it will give you all the buy and sell signals in a nice, easy to sort, easy to read list so you can spot those for yourself. With that said, we are actually looking at setting up a alert service basically that uses the trade trend signals and alerts members to opportunities that we're monitoring in the market. So that's something that if you become a trade trend member down the road, we're going to be offering in conjunction with the trade trend subscription on Metastock.
In addition, one of the things I like about the scanning in Metastock is you do have the ability to just scan that optionables list, and then you can just see what the optionable stocks, which one they're issuing a setup or a trigger there too.
Correct. Yeah, in fact, we can look at that. So if you pull up the Power Console in Metastock and you go to the Explore tab, you can see I've got they have a lot of really good pre-populated screens on the platform, but you can also set up your own. So you can see I've got Jeff's future list, Jeff's weekly options list. So you can scan those. The weekly options list is just equities and ETFs that have weekly options that trade on them. And so you can just check that and then check the trade trend. And you can look for, just long setups, just short setups, or both, and start the exploration. And it will scan the whole basket of equities and ETFs that have weekly options available on them and give you all the buy and sell signals. And again, remember that the signals are provided up to 3 candles in advance. So we're scanning a daily chart. It's going to tell us when the signal occurred and how much longer the signal is valid for. So like if the signal occurred today, it's going to be good for up to 3 more days. If it occurred yesterday, it's good for up to 2 more days. But you can see that it gives you a nice scan and all the results for both long and short setups.
AMC, interesting, has one. I just noticed that. Richard, I like this question from Richard in GoToWebinar. Many of the, do you take all the signals or do you pick and choose? So right here we've got, this is a pretty good example. We've got like 54 out of like 500. Is there any way that you kind of narrow this list down a little bit more?
Yeah, that's a great question. We get that one a lot. In fact, the good news is if you decide to try out Trade Trend on Metastock today, we do hold live trade sessions where I show how I use the signals and how I can improve on the consistency and accuracy of the signals. For instance, by only taking buy and sell signals off support and resistance levels. And sometimes we'll incorporate other indicators, volatility indicators and things like the Bollinger Bands or Keltner channels, and use those in conjunction with Trade Trend to more accurately pick buy and sell signals off tops and bottoms in the market or within the context of a broader uptrend or downtrend. So if you end up trying Trade Trend on Metastock today, you can simply shoot us an email, support@altostrading.com. Let us know that you joined on Metastock and are a Trade Trend user, and we'll give you immediate access to our members area, which contains all the previous recordings of our live trade sessions, where you can go back and watch a lot of the content that shows how I use Trade Trend myself. And not only that, you'll get access to all the future live trade sessions as well.
Okay, let's see. How does this work on stocks like Apple or Tesla? Rob from YouTube wants to know.
Rob wants to know how it works on Apple or Tesla. I found that it works great across virtually all securities. I don't necessarily trade those those 2 stocks a whole lot. So again, in terms of giving personal feedback results, I can't really comment on that. I could certainly pull up a chart of, let's just go with, you said Tesla was one of them?
He particularly said Apple or Tesla. And what was funny is I pulled up a chart of Apple and I thought you were showing it.
Oh, is that right?
Yeah, looks pretty good on Apple, I'd say.
I ended up pulling up Tesla, but
also looks like a pretty good chart.
Yeah, and you'll notice that it got some really nice trends here, getting some good warnings. On the recent sell-off in February, it provided a sell warning on Tesla on February 25th. and a buy warning on March 20th near the bottom of the sell-off, and gave us some nice signals on the rebound.
We're getting, and I'm just gonna, I don't necessarily think I'm gonna have you answer this one directly, but we're getting some very specific questions about the Saudi share index and the Philippine Stock Exchange. And for those exchanges, what I'm gonna have you do, if you're watching and you wanna kind of get some very specific charts or some system tests or something along those lines, get a hold of us. One of the things that we've got is you can reach out to us at metastock.com/sales-chat. We'll pull any chart you want to look at, and we'll send you the signals for it or the system test. And so for those of you that want to see very, very specific markets, we do have a lot of people that use Metastock and they use it in the Saudi all-share market. So in fact, one of my first trips overseas was to train a bunch of, quite a few Saudi sheiks in Saudi Arabia. It was a very cool trip. So get in touch with us, and we will be happy to pull those types of charts for you since they're, and spend the time with you to kind of look at it. Paul says, very impressive tool. How does it compare to RMO or value charts? And I'd say that's the same answer. I do like the trade trend quite a bit because it's really, really specific. Buy here if it goes above this price, and here's your stop loss, and it just kind of walks you through that trade. And so I would say it's a lot, very, very straightforward in terms of really kind of staying in the driver's seat with you and kind of helping you run it. So Bob Klein says, can you do explorations with this in Metastock? And yes, you can. I think you asked that before we actually showed the explorations, but you can scan for either the setups or the triggers for either long or short. Okay. Our guys wants to know if you look at volume at all as an indicator. Jeff?
Volume is actually not incorporated into the algorithm, but it's more volatility that the indicator looks at. So it incorporates some volatility studies and analysis into the algorithm.
One last question, I think. Hopefully I didn't miss any questions because there's been a lot of them. And thank you for all the questions. How has the backtester performed? Since you're not showing the backtest, how well has that actually worked? One of the things I actually like, I'm going to talk a little bit about this and maybe let Jeff kind of chime in about it as well, is with the backtester, you can actually go in, and with Metastock's backtester, it allows you the ability to go in and test like all the Dow stocks or all of the S&P stocks or all of the option stocks. So it gives you a pretty good idea of what stocks it works well with and what stocks it doesn't work well with at the same time. But in addition to that, I think I'd always rather see kind of performance results, and Jeff did a really good job of showing kind of exactly the results he's getting with his TD Ameritrade account. So we'll be happy to run some back tests for you. Just get in touch with us, Brad, and we'll find out what markets you're interested in and kind of send those over to you. Any thoughts on that, Jeff?
Yeah, I just add to that I do really like that about the Metastock platform, because I always take backtest results with a grain of salt. It's very seldom, if ever, that backtest results are replicated in live forward trading. So always know that anytime you perform a backtest. But with that said, there's some value to them for sure. But what I really love about the Metastock platform is you can, as Jeff mentioned, run a back test across a market. So like if you just wanted to look at the basket of S&P stocks to see how it performs and select the ones where it tends to produce greater profits, select the individual equities, that is. Metastock is a great tool for that because you can scan all the S&P stocks, for instance, and it gives you a nice list of the ones that you can sort by performance. And so you can, for instance, if you're trying to create a portfolio of trade trend stocks to trade, and let's say you want to pick out 10 of the best, you can use that tool and then select the top 10 from the list and simply trade those, being that the indicator has shown to perform the best on those particular securities. So I really like it for that, and I actually use it for that to select, because I think that was an earlier question from one of the YouTube viewers, to select which securities to trade within a market. So it's great for that.
One last question. I know that I said that for the last 4 questions in a row, but Carla wants to know, do you have any comments on how well it works with FX or currency pairs?
Yeah. I do trade currencies through the futures market. I have traded spot currency before. I don't do that nowadays. I just trade through the futures markets. But yeah, it does work very well in the forex market, and we have a lot of members who use it in forex.
All right, I'm going to kind of talk a little bit about the offer we're going to do today. Is that all right?
That'd be great.
Okay, very cool. And thank you for everybody that came. I appreciate it. This has been a very, very popular product for us and very well received. We've had it out. I think we released it in January of 2019.
Yeah, we're about a year and a half since from release. Yep.
It's been very, very popular. People really like it. I'd recommend that you try it. And we're going to kind of set it up as a really good trial offer for you. As we showed you, it's going to give you the real-time signals. It's going to tell you where the setups are, where your trigger entry price should be, and how to get out of the trade based on kind of what the exits look like. And that's going to be done through the commentary breakdown. We're going to give you that full market scanning. You can scan any market that you want, whether that's Philippines or Saudi Arabia or here in the US or the optional stocks, whatever you want. You have the ability to do testing of trading ideas and see how well they work. And it's just a really, really complete package. So it's going to include that expert advisor, the scan, the system test, and all of it's available basically for $90 per month as part as an add-on subscription to Metastock. Okay. That's $90 a month or $972 per year. Basically, we give about a 10% discount if you pay for that by the year. What we're going to do to we call this an extended trial subscription. So what we're going to say to you is if you want to give this a go, thank you, number one. Number two, what we're going to ask you to do is just pay for the first month, and we're going to give you the second and the third month for free. That allows you to, the ability to try it for 90 days, really kind of take a look at all of the signals that are coming out, play with the system, and see really whether or not it's worthwhile for what you're doing. And basically, that lowers the cost for you down to $30. And it's a fairly low risk offer because if it works for you, great, you're going to want to pay for it. You're going to keep subscribing to it. And that's generally been our experience. But if you decide you don't want it, well, you just cancel. And then you're out $90. But then you know that you're not missing out on a huge opportunity for you. Like I said, we can do that because the satisfaction has been really high. We'd encourage you to try it. And you can sign up for that offer at metastock.com/tradetrend, 3-for-1. You can give us a call at 800-882-3040. And again, if you have specific charts you want to see, if you want us to pull the system test for you, if you want to see results, get in touch with any one of the sales guys that we have on our team. They're all very, very knowledgeable. They all have everything in stock. And they're always happy to kind of work with you and send you anything you need, whether it's different videos or chart examples or you name it. And so you can, with those questions, you can get in touch with us at metastock.com/saleschat. So I do want to say thank you, Jeff. You did a great job today. I really appreciate kind of the clarity that you give when you come in here. I want to say thank you guys for coming. I hope you're doing well. I hope you're staying safe. And it's good to see it here in the Metastock room, whether that's GoToWebinar or YouTube. And Jeff, do you have any final thoughts?
Just want to say thanks for having me. I really appreciate it. I hope you guys all got a lot out of our session today, and we'll give TradeTrend a try. I think that you'll find that it's a very valuable addition to your toolbox. And again, if you have any additional questions, always email us at support@altostrading.com. Happy to answer those and provide any help that we can. If you do decide to try out TradeTrend today, make sure to also email us and let us know so that we can give you access to our members area where you can watch all the really great training that I've held. And we do those 2 or 3 times a month. You're going to get immediate access to all the recordings with different strategies, option strategies in different markets that we use TradeTrend in to further your education and help you use the tool to the best of its abilities. So I'll end with that. And again, thanks for having me. Hope you guys all have a great rest of your week.
All right. Thanks, everybody. Stay safe, stay healthy, and we will see you again next one.